This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, global stocks slid lower today as investors brace for rate hikes. Emerging markets in particular took a beating as we saw U.S. Treasury yields surging in anticipation of a hawkish U.S. Fed. Now, MSCI's index of emerging shares slipped for a fifth straight session, down 0.5% on the day. In Egypt, profit-taking continues today with the benchmark EGX 30 index falling over 1% again today. But traders say the continued decline is seen as a normal correction and a good chance to buy dips at relatively better prices. South Africa's JSE All Share didn't follow its peers' footsteps, instead firming up just over 1% on the day. All indices were up on, except of course financials. Top performers were resource stocks. The index climbed over 2% with firms like Kumba, Anglo, Sasol and of course Implats topping the gainers chart today. Now also coming up on today's show. The World Health Organization optimistic of beating the coronavirus pandemic if the world can eliminate inequities in vaccinations and medicines. And food prices push up Nigeria's inflation as the country continues depending on imports. And businesses see good tidings this year as governments continue easing restrictions. We'll be looking at Egypt's Nile Air. Well, our starting point tonight is on the COVID-19 pandemic. The World Health Organization says the worst of the pandemic could be over this year. However, this remains dependent on eliminating various inequities in vaccinations and, of course, medicines. Public health officials have warned it is highly unlikely that COVID-19 will be eliminated, and they say it will continue to kill people, though at much lower levels. Now, these comments were made at the online annual World Economic Forum gathering.
Endemic in itself does not mean good. Endemic just means it's here forever. What we need to do is get to low levels of disease incidence with maximum vaccination of our populations so nobody has to die. That's the end of the emergency in my view. That's the end of the pandemic.
I think there's absolutely no reason why a continent of Africa should be lagging behind with having 7% of the population fully immunized. A continent of 1.2 billion people is totally unacceptable.
Now, the WHO on Friday recommended 2 new drugs for COVID-19, providing yet more options for treating the disease. Here's Wilkista Nyabwa with more.
As of 13th January 2022, 36 out of 194 WHO member states had vaccinated less than 10% of their population against COVID-19. 88 other countries had made more progress, but their vaccinated populations still fell under the 40% mark. And as the Omicron variant of COVID-19 continues to spread, the World Health Organization is calling attention to the need to scale up COVID-19 vaccination rates.
In some countries, cases seem to have peaked, which gives hope that the worst of this latest wave is done with, but no country is out of the woods yet. Make no mistake, Omicron is causing hospitalizations and deaths, and even the less severe cases are inundating health facilities.
The World Health Body continues to warn against easing measures taken to protect the public, saying the battle is not yet won.
Across all of the vaccines, high levels of protection against severe disease. That's the outcome we're most interested in, protection against death. Against Omicron, many of the vaccines have shown a reduction in efficacy against infection. And that's why we see a lot of breakthrough infections, but these are mostly not resulting in severe disease.
The WHO recommended 2 new drugs providing yet more options for treating the disease, sharing new information on the breakthrough science and increasing access to drugs, scientists note, is vital in the fight against the disease.
This is a dangerous virus. but there is hope out there because we can reduce severe disease and death significantly with earlier clinical care, with vaccines that are reaching those who are most at risk around the world. This won't be the last variant of concern. So now is the time to support and invest in the surveillance system.
Scientists and policymakers are working with leaders and healthcare workers across the world toward achieving the target of vaccinating 70% of populations by July 2022. Wilkes Anyawo, CGTN.
And moving on now, global food prices hit a 10-year high last year, rising by an average of 28%, and that's compared to the previous year, according to the United Nations Food and Agriculture Organization. Well, in Nigeria, a 15.4% inflation rate is now worsening the situation, with the country still relying on imports of some major food supplies. Well, our correspondent Tessem Akande reports from Abuja.
It's dinner time at the home of the Agbos on the outskirts of Abuja, the Nigerian capital. But Jacob, the head of the family, says soaring food prices in the country have forced them to cut back.
We're a family of myself, my wife, and 2 children. What we've done is to adjust our feeding. If we're eating 3 times a day, we eat twice. Basically, we take the breakfast and maybe dinner, we skip lunch, just to make sure we keep up with what is happening right now, the reality of what is happening right now.
The Agbos are just one of many struggling Nigerian families. The United Nations tracks monthly changes in the international prices of commonly traded food commodities. Its food price index dipped slightly in December, but was still higher than the previous year. The global body adds that 8.6 million people are facing food shortages in Nigeria's northeast alone, and many of them can't cultivate their farms due to an insurgency.
A few years ago, about 5 years ago, there was a prediction that by 2030, the food would rise. There will be a shortage of food, 30% less food produced because of climate change factors. So that's the major culprit when it comes to that. So many economies are not producing as much because of flood, for example, and so many other hazards that come on the way of food production. But there are also other issues, increasing conflict. Conflict in many countries of the world. The conflict, especially in Africa, is worse in Africa. They affect the farming communities.
At least 76 rice farmers were killed in Borno State by suspected Boko Haram terrorists in November last year. Experts say the government needs to address insecurity and climate change for the situation to improve.
It's not individuals that tackle security challenges. It's the primary role of government to deal with that. And then while the bank is doing what it can to work directly with the farmers and work on the production system.
The Nigerian government says it is trying to address the problem, partly through agricultural schemes. It has provided more than 8,000 small-scale farmers with climate-resilient seeds. High in nutritional value, they are designed to produce more crops without excessive fertilizer use. The government has launched a school feeding program that provides food for children for free during school hours. It also says it's in the final phase of tackling insurgency so that farmers who are internally displaced can return to their farms to cultivate. Millions of Nigerians like Jacob Agbo hope these efforts will pay off. Feeding their families continues to be a challenge. Tessem Akande, CGTN Abuja, Nigeria.
Now, in South Africa, consumer price inflation continues to accelerate due to higher fuel and food prices. Now, annual inflation was 5.9% in December. That's up from 5.5% in November. Here's CGTN's Angelo Coppola with the details.
Statistics South Africa says that this is the highest annual increase since March 2017, when the rate was 6.1%. Meanwhile, the consumer price index increased by 0.6% in December.
And it's uncomfortably close to the South African Reserve Bank's upper band of the inflation target range. And so we are really concerned about inflationary pressures at the moment.
There's one major driver that's pushed inflation to 5-year record highs. It's at the core of all economic activity.
And the real key driver, if we look at the more underlying factors, was once again the higher fuel costs coming in from a higher oil price. What we're seeing is that the oil price really has surprised on the upside of late.
The other driver that is likely to add pressure to households is electricity. Eskom is pushing for a 20.5% tariff hike. It's going to affect some consumers badly.
When you think about people in the poorer households, when you think about their inflation dynamics, that's around 6.2% at the moment. So inflation dynamics are becoming problematic for your lower income households, which, food inflation, electricity inflation, and fuel inflation are contending for a portion of their budget that's taking away from demand for other goods and services.
Consumers will also see higher prices from retailers.
Up until now, retailers have been absorbing most of these high inflationary costs, but now it comes to a point where it does need to start being passed down through to the consumers. There's little room to maneuver in that respect.
The higher inflation figure means that interest rates, the tool preferred by the Reserve Bank to keep inflation between 3 and 6%, comes into play.
So when they think about monetary policy implementation, they'll be thinking about the 2-year ahead inflation profile. And so when these numbers come through and they are elevated, they lift that starting point and could potentially lift the South African Reserve Bank's 2-year ahead inflation forecast.
We are expecting a sort of further near-term spike. Inflation hasn't spiked just yet. We expect it to spike at around February. And, this will sort of really target, I think, or cement the case for a rate hike of around 25 basis points in the January MPC meeting. And we believe, any pauses in the rate hiking cycle would likely only come later on in the cycle.
Analysts say that the hike in consumer inflation closer to that upper end of the central bank's target range is likely to put pressure on the bank to increase interest rates in February. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Well, now let's take a look at other corporate headlines today. Groups representing the descendants of South Africa's earliest inhabitants, the Hoi and San, have undertaken legal action against the construction of Amazon's new 70,000 square meter Africa headquarters. They regard that land as sacred. The court case is expected to last about 3 days. And South Africa's Capitec says it will offer shares worth up to nearly $65 million to employees at a discounted rate. The Black Economic Empowerment transaction move is expected to lower its earnings per share. Now, ownership targets require Capitec Group subsidiary Capitec Bank to have at least 25% Black ownership. Capitec shares were down 1% on the day. An U.S. multinational computer tech firm, Oracle, opened a data center in South Africa on Wednesday. The center will provide local cloud services across Africa for the first time. Now, Oracle says it is racing to open at least 44 cloud regions this year as it plans to catch up with cloud computing rivals such as Microsoft, Amazon, and Google. Though Oracle has no plans for more data centers in Africa this year, it says more could come next year as it explores areas such as West Africa. And shares in Japan's Sony Group dropped 9% on Wednesday. That's after gaming rival Microsoft revealed plans to buy Activision Blizzard in a record $68.7 billion deal. The purchase of the Call of Duty maker comes as Microsoft aggressively expands its Game Pass subscription service. And that is a look at our corporate headlines. Well, let's head into a short break now, still to come on the show. The International Monetary Fund calls on public and private creditors to complete a renegotiation of Chad's loans by the end of March. And businesses in Nigeria optimistic of recovery as economies ease restrictions.
So this is it. I'm just about to be shot.
The little tents here, bottles are being thrown as they do so.
There are about 3 critical bridges here in Malawi. That's one of them. We're going to cross that bridge.
As you can see behind me, police forces
who are replying with gas. Gas just came in.
Tear gas, so it's all begun now.
Divisions leading the charge into West Mosul have brought us here.
just got to be careful here with some gunshots. Excuse me.
This is where most of the fighting has been concentrated.
Is the front line now after 9 days of fighting?
We're about 2 to 3 kilometers from the
Within
front
clear
line.
view of this front line position.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Welcome back. Now, the International Monetary Fund is urging public and private creditors to complete a renegotiation of Chad's loans by the end of March. This, of course, will be critical to restoring the sustainability of the nation's debt. Now, creditors such as mining giant Glencore have been asked to agree on the restructuring of Chad's debt on the same terms as those reached with its official creditors under a G20 debt relief initiative. About a third of Chad's public external debt is owed to Glencore and, of course, other commercial lenders. The Central African nation, which has little access to global capital markets, tapped Glencore in 2013 and 2014 for nearly $1.85 billion in about 2 deals. Well, let's discuss the country's debt profile further with Paul Melly. He is a consulting fellow at the Chatham House Africa program. Great to have you with us on the show, sir. Now, let's take a closer look at Chad's debt profile. It was the first nation to request a debt restructuring under the G20 relief plan. The nation currently has no Eurobonds as well, but debt owed to the Paris Club is less than 4% of the country's total debt stock. Its commercial debt, on the other hand, is chiefly that Glencore loan. What's your sense then of the country's debt burden and, of course, its ability to service that debt going forward? Not sure if you can hear me, Mr. Melly, but let me just say it again. Chad, of course, a majority of its debt owned by commercial lenders, chiefly from the mining giant Glencore, 4% of its total debt stock to the Paris Club. What's your sense of the country's debt burden? Well, it looks like the guest can't hear me. We'll certainly try and get him back later. Well, in the meantime, let's move on now to Tunisia. The country's economic growth is expected to rebound to 3.5% this year, and that's from 2.9% recorded in 2021. That, of course, is according to the latest report published by the World Bank. While the North African state's economy is, however, projected to decelerate to 3.3% in 2023 due to an ongoing political crisis that, of course, got worse last year. Here's CGTN's Adnan Shawshi with the details from Tunis.
An acceleration in COVID-19 cases, increased restrictions on mobility, and political uncertainty throttled Tunisia's economic rebound in 2021, and the World Bank is warning that the current health crisis could slow down its recovery this year, which it forecasts will reach 3.5%. Economists say the growth is possible, but not enough, because most economic indicators were negative in 2021.
Achieving 3.5% economic growth is realistic, but it is not enough, and it does not reflect that Tunisia's economy is recovering from the repercussions of the coronavirus crisis. The 2020 growth rate was a historical negative 9%. The country needs at least 9% growth in 2022 to say that the national economy is improving after the pandemic.
The World Bank also estimates that the high level of debt could impact impact economic activity in Tunisia, experts have said that the current situation increases the risk of debt being unsustainable if economic indicators do not improve in 2022.
Tunisia's public debt has exceeded 100% of GDP. This will not encourage foreign and local investors to start public-private partnerships because the public sector might not be capable of paying its debt. Investors don't want to lose money. This will slow down economic activity.
The Tunisian finance minister declared that her department has approved new measures to help businesses cope with the impact of the COVID-19 pandemic, preserve jobs, and sustain business activities.
The 2022 state budget includes several measures to promote investment on all levels. The government will provide a favorable investment and business climate that will contribute to the economic recovery this year.
The World Bank estimates that as vaccinations increase and mobility restrictions ease, growth should accelerate further in Tunisia. However, the outlook is uncertain and depends on the course of the COVID-19 pandemic in the North African state and the world. Tunisia is facing several challenges due to the lack of political and social stability and the constant pressure on economic indicators. Analysts maintain that there is high uncertainty over the economic recovery and the negative impact of the pandemic. Abdel Shawishi, CGTN, Tunis.
Well, let's go back to that story from Chad, where the International Monetary Fund is urging public and private creditors to complete a renegotiation of the country's loans by the end of March. Let's take a closer look at the country's debt profile. We're joined by Paul Melly again. He's, of course, the consulting fellow at the Chatham House Africa program. Great to have you with us, Mr. Melly. And let's start off with the country's debt profile. Less than 4% of Chad's debt owed to the Paris Club, but over 40%, of course, goes to those commercial lenders, majority coming from mining giant Glencore. Give us a sense of the country's debt burden and, of course, your thoughts on its ability to pay that, or rather service that debt going forward.
Well, the problem with the 1 billion that's owed to mainly to Glencore, of course, one of the world's commodity giants, is that Chad's ability to service its debt is so heavily dependent on its oil revenues. So when the oil price is up, and we've just seen, obviously, over recent months, a bit of a recovery in the oil price as the world economy begins to pick up after the pandemic or emerge from the pandemic, then Chad's ability to earn revenues from oil and service the debt is enhanced. But when there's a slowdown in the world economy or a setback, as we saw during COVID, but has often happened over recent years from time to time, then immediately Chad is under huge pressure and its ability to service the debt is reduced because it's so heavily dependent on its oil exports. It is one of the poorest countries in the world. It's landlocked in development terms. It's very, very weak. And its only other major export is cotton, which is also a commodity, of course, dependent on shifts in world markets. So that's where the real vulnerability lies. And the difficulty is that although the Chadian debt at around 3 billion, as was calculated late last year, is not actually very large compared to many other African countries, Chad is so fragile and its room for maneuver is so limited. That's where the problem lies. And there's also a feeling that all creditors should share the burden, if you like, of trying to help Chad get out of this difficult situation, which is why the IMF has been so insistent that Glencore should participate in the debt rescheduling or debt reduction effort.
And of course, Glencore is one of Chad's major creditors, but it is also a private company. And of course, the IMF says that Glencore has agreed to negotiate, but I like the way you put it. The IMF is sort of insisting that Glencore should renegotiate those loans. But do you get the sense that Glencore is stalling on revamping that, restructuring that debt, because it already has restructured it twice?
Well, the difficult point, I think, for Glencore is, as you say, the fact that they have restructured it before. And so what they said in indicating to the IMF late last year that they would engage in what they described as good faith discussions about the Chadian debt is that they want to make sure that in the assessment, in the way when the international community and principally the IMF is, as it were, weighing up how much effort Glencore is making, the company wants to make sure that the things that it has already done are taken into account. In other words, it doesn't want its new restructuring effort now, the one that's being negotiated, to be treated as if Glencore hadn't done anything at all to help before. It feels strongly that its earlier efforts should be taken into account. And Glencore may be feeling a bit pressured over this situation because Chad is not the only country where there was a large debt to Glencore and where pressure from the IMF forced Glencore into a restructuring effort. Also in Congo-Brazzaville, one of Chad's regional neighbors, the same situation happened. The IMF banged the table and said that, as it were, a financial rescue of Congo-Brazzaville could not take place unless Glencore, and in that case, other creditors, including China, for example, and Trafigura, another commodity company, joined the effort. So this is something that the IMF is pressing very, very hard on as a principle, but Glencore is willing to buy into that principle and accept it on the basis that it is also treated as somebody, as an entity that's made some effort already before. Right. That seems to be the thing that possibly is slowing up the agreement that the IMF is so anxious to see concluded.
Now, of course, a lot of this will depend on not just the economic outlook for the country, but also the political outlook going forward. Now, the IMF says that it believes progress has been made on those structural reforms. It also says it believes the current government is committed to that reform agenda. What is your assessment of the road so far for the country politically, and do you agree with the IMF?
Well, I think agreeing on the reform program in some ways is the less difficult part. But when you agree on those reforms in an African government, you need to have the political strength, if you like, the political self-confidence to then carry that forward. And you have to persuade the population, the public, civil servants, for example, workers in state entities, people who could go on strike, as well as the wider population in the countryside, that this effort is worthwhile. And what's so difficult for Chad is it's in a political transition. In April last year, the long-standing president, Idriss Déby, was killed in conflict with rebels. And so the current government is a transitional government led by Déby's son, but with a constant process of evolution and negotiation about the political route forward. So because it's a transitional government, it doesn't have the legitimacy of having been elected. It doesn't really have a broad mandate from the Chadian public as a whole. There are a number of opposition parties who have decided not to join the transition process and support the transition government because they're not convinced about what it's doing. And so that government doesn't quite have the strength, the political strength, if you like, to go out and take on tough decisions and difficult sacrifices on, as it were, in the name of the Chadian people, perhaps to the extent of a government in a country where there is a long-term government or one that's been elected and actually can speak on behalf of the people that it is ruling. So that's where it's somewhat difficult. We can assume that an agreement with the IMF is so important that any successor government is almost certain to honor it and stick with the program. But in selling difficult decisions about, for example, keeping a tight control on government finances and how much the state is able to put into the economy, how public servants are treated, how public state-owned companies operate, all those difficult decisions, it's easier if you're a government that has a strong and broad politically legitimate base. And of course, because this is a transition government, it doesn't quite have that.
That's quite right. Well, we thank you so much for joining us on the show today and for those great insights. That, of course, was Paul Melly, Consulting Fellow at the Chatham House Africa program. You're watching Global Business Africa. Let's take a short break now, but still to come on the show. The world's 10 richest people now own more than the world's poorest 3.1 billion people. And airlines across the world cancel or change flights into the US over a 5G dispute around airports. Change is on the horizon. Through the shifting of time, Africa's emerging tech landscape is creating new channels.
There's a hunger for local African content globally.
Shaped by innovation, carved out by a new generation of digital entrepreneurs, sculpted by a mobile revolution, and trickling down to the most remote corners of the continent. TechSpot is seeking out the new concepts in technology, disrupting Africa's traditional sectors.
You're watching breaking news on CGTN.
Welcome to the world today on CGTN.
And now a quick look at other headlines this hour. Sudanese military leader Abdel Fattah al-Burhan has formed a committee to investigate the deaths of 7 protesters who were killed on Monday. This brings the total death toll to more than 70 since protests began last October. Now, the demonstrations were sparked by the dissolution of the Sovereignty Council and ministers and the declaration of a state of emergency in the country. And 13 non-governmental organizations are pleading with the international community for the protection of Malians. This comes after the European Union announced last week that it will support the West African Regional Bloc, ECOWAS, in implementing collective sanctions against Mali. Now, the country's interim government, led by Colonel Assimi Goïta, triggered those sanctions by shelving democratic elections, which were scheduled for February. And Chad has released 22 rebels and political dissidents following an amnesty law passed in November last year. Jailed for treason, the prisoners were freed as a precondition to a national dialogue, which is scheduled for February 15th. And police in the Democratic Republic of Congo have arrested 2 men in connection with the killing of an Italian ambassador and 2 other men who he was traveling with last year. Ambassador Luca Atancio was killed along with his bodyguard and driver near the eastern city of Goma last February. And that's a recap of other headlines this hour. Well, let's now turn to the World Economic Forum, where lawmakers and business leaders have been addressing the social and economic crisis caused by the coronavirus pandemic. They're also looking at accelerating the transition to green energy. Now, Chinese President Xi Jinping called for cooperation on climate change during his address on Monday. He also called for the implementation of the outcomes decided during the COP26 summit. The president said that developed economies should take the lead in honoring their responsibilities and also create the necessary conditions for developing nations to address climate change and economic sustainability. While the 2022 World Economic Forum is focusing on global cooperation as well as challenges related to climate change and COVID-19. Well, my colleague Tian Wei had an exclusive interview with Borge Brend, president of the World Economic Forum. Here are some excerpts.
How do you make of the points and the answers China tries to provide for some of the challenges the world is facing today?
I saw a very clear red thread from the speech that President Xi Jinping had in Davos in 2017 that was a very important one, and the one he delivered also to the Davos community this year. And the red thread is the importance of global cooperation. Global challenges need global solutions. And as the big economy, together with the US, the so-called G2, the cooperation between the US and China means a lot. And also, it was so important when the president underlined the importance that we continue to have trade with each other, that we are in a win-win world and not in a zero-sum world, and that we have to collaborate to fight climate change, to fight COVID-19, but also to secure growth and prosperity for the future and strengthen multilateralism.
What do you think have been the response from those that were attending the conference online?
We heard a lot of positive response from our business partners, and we know that there is also a lot of investments in China, and the fact that President Xi Jinping made it clear that China will continue on reforms. It will continue to be an open economy and welcome investments, FDIs, but also China will continue to then invest globally. And he also argued strongly against this notion of decoupling. And this is something that business community appreciate a lot, not two systems, but a collaborative one. Of course, there will be areas where big nations do not agree, like the US and China. That's fair enough. But there are areas where they definitely need to collaborate to secure the future of our planet and in the interest of humankind.
Now, the world's 10 wealthiest people have more than doubled their fortunes to $1.5 trillion, even amid the COVID-19 pandemic. And that's as poverty rates in health, social, gender and racial inequalities increased. Now, according to an Oxfam study released ahead of the World Economic Forum, the 10 richest people own more than the world's poorest 3.1 billion people. 160 million people have been pushed into poverty, and inequality has contributed to the death of at least 21,300 people each day. An estimated 5.6 million people in poor nations die each year due to lack of access to health care, while hunger kills more than 2.1 million annually.
We have research that shows how inequality is contributing to the death of one person every 4 seconds through preventable, solvable problems: hunger, lack of access to health care, and at a time like this, lack of access to vaccines. I think solutions within reach, a billionaire's income tax or a wealth tax that's being discussed globally and certainly here in the United States could generate resources at a significant amount. You know, if these 10 men who are the wealthiest people on the planet would lose 99% of their wealth tomorrow, they would still be richer than 99% of all the people on this planet. We have the ability to make real change. And what we're seeing is an egregious explosion of inequality and unequal wealth that doesn't have to be this way.
Well, let's shift to the U.S. now, where telecom firms AT&T and Verizon are expected to delay the launch of a new wireless service near key airports. And this comes after the nation's largest airlines revealed that the aircraft technology would be interfered with and cause massive flight disruptions. The U.S. government recently tried to broker a settlement between the telecom firms and those airlines over a rollout of a new 5G service that had been scheduled for Wednesday. However, airlines want the new service to be banned within 2 miles of airport runways.
Telecom companies had agreed earlier, about 2 weeks ago, to reduce the power of their transmitters near runways for the next 6 months. Now, the deal they struck with the Federal Aviation Administration says that after that, they're free to do whatever they'd like, and that is not sitting well with the airlines. But at least until early July, they have agreed to reduce power near airports. Altimeters they operate wirelessly as well. They use a spectrum of the radio band that is fairly close to this C-band section of the spectrum that is used for this new 5G service. The telecom companies say there's enough space between these two ranges that the new service is not going to pose any interference problem to aviation.
Well, as a result of this, airlines across the world, including the long-haul carrier Emirates, rushed on Wednesday to cancel or change flights heading into the U.S. over that dispute. The issue appears to particularly impact the Boeing 777s, which is a long-range wide-body aircraft used by carriers worldwide. And on that note, let's head to the UK now, where British consumer price inflation rose more than expected to 5.4% in December. This is the highest in almost 30 years, putting pressure on the Bank of England to raise interest rates again next month. Now, economists had forecast that the annual CPI rate would edge up to 5.2% in December from November's 5.1%. The increase in CPI to its highest since March 1992 reflected a wide range of goods and services, according to the Office for National Statistics. The biggest impact came from food and drink, followed by restaurants and hotels. Economic disruption from the Omicron variant of the coronavirus in December had only a negligible impact on the headline rate of inflation. And in Argentina, the economy minister has warned the International Monetary Fund that it risks losing credibility if it pushes the country into a destabilizing situation. Now, Argentina has received $44 billion of a $57 billion loan. The lender accuses Argentina of failing to achieve its objectives of restoring confidence in the country's fiscal viability and also fostering economic growth. Now, Argentina has been in recession since 2018 and is now seeking to renegotiate its down payment plan with amounts of $19 billion and $20 billion due in 2022 and 2023.
If the International Monetary Fund pushes Argentina into a destabilizing situation, it will also have less legitimacy when in the future other countries require multilateralism to be able to solve their problems together with the international community in deciding what to do, whether or not to go to the institution. Argentina is the G20 country that has grown the most in 2021. With 10% of product growth, employment numbers are growing, investment is growing. What we want is to be able to give continuity to this recovery, and for that, it is very important not to have a burden of debt on our backs that inhibits us from continuing on this path.
And heading to China now, the country's stated intent of achieving its carbon neutrality goal by 2060 or ahead of target has now spurred big firms in the electric vehicle and traditional power sector to intensify their green efforts in the country. Here's Yu Bokun with the story.
One of the big winners in China's stock market in 2021 was the utility sector, as it notched up gains of over 40% and outperformed the broader market. Share prices of the long-unloved coal-based power generator, such as Huaneng Power International and Huadian Power International, saw increases due to the renewed investor interest. Analysts say there are several reasons behind the share price surge, such as China's pilot scheme for green electricity trading, recent reforms in electricity prices, and high expectations about the performance of the power company in the renewable energy sector.
The 2060 carbon neutrality goal creates more growth opportunities for power operators.
The market has been betting on the target-setting effort by major firms, such as the top 5 power producers who have announced timelines for carbon reduction.
By the end of the 14th five-year plan, new energy capacity in central SOEs needs to be more than 50%. That's why we saw many companies set their goals to that level last year. So we think the probability of achieving that is very high.
China Resources Power also saw great attention from investors last year, with the share prices rising to highest level since it went public. The company has started its latest offshore wind farm project, which is the country's first to achieve grid parity.
By the end of 2025, we target that our renewable capacity will exceed 50% of our overall capacity mix.
In 2020, the company's net profit from the new energy business accounted for as much as 50.1%, surpassing that of the thermal power business.
For 2021, renewable energy sector clearly outperformed the coal-fired power sector as a whole. China has formulated a nationwide carbon market. That market will become more and more mature. At the same time, we also noted many industrial and commercial customers are demanding the usage of green power. So together with carbon market development and usage of green power, return on invested capital for renewable energy projects will continue to improve.
Power producers are crucial in China's effort to achieve carbon neutrality. This is not only because they accounted for nearly half of the country's emissions, but also because of their advantage in the process of energy transition. Last year, China emphasized on fuel's dominant role in the country's power generation. So instead of the banking on a coal-free future, the grid may need to rely on at least some coal remaining in the near future, as is necessary to alleviate peak demand power shortages.
New energy, including wind and solar power generation, is not stable due to limitations of weather and time. That's why we saw a tight supply last year, despite all the renewable power installations we have.
The positive cash flow of the power generators also matter.
If we need to build large-scale new energy during the 14th five-year plan period, large-scale cash flows are essential. Where will the money come from? Thermal power can provide it since they don't need subsidies. As a result, the cash flow is relatively good. It will help the country further new energy investments and construction.
However, the process of phasing out fossil fuels will not be an easy task, but a Herculean one for power giant. According to data from S&P Global Ratings, a vast majority of the coal-fired plants will not be phased out into 2040.
Meanwhile, Microsoft says that it is planning to acquire the game Activision Blizzard for $68.7 billion in the biggest gaming industry deal ever. Well, CGTN's Mark New has the details on why Microsoft made the deal and, of course, the challenges it faces.
Microsoft is buying Activision Blizzard, the makers of hugely popular video games such as Call of Duty, Candy Crush, and Overwatch. The deal is Microsoft's biggest ever acquisition and the largest all-cash deal by any company on record.
It's the biggest deal in gaming history at $68.7 billion. And, in some ways, you could argue that even with 10,000 people and franchises like Call of Duty and Overwatch, that Activision Blizzard is a smaller company in this business now. And we have the likes of, Facebook and Tencent and, Google, Amazon, Microsoft, all participating in this business that used to be just, Sony, Microsoft, Nintendo.
Takahashi says Microsoft will get more content for its Xbox Game Pass subscription service, equating it to a Netflix for gaming. In a statement, Microsoft CEO Satya Nadella said this will play a key role in the development of metaverse platforms.
If you want to go from one world to another world in the metaverse and do that all day long, then Microsoft is collecting all of the games and the assets for you to do that.
The deal comes just a day after Activision Blizzard announced that it had fired and pushed out more than 36 employees and disciplined another 40 since July over allegations of sexual harassment and misconduct. Those moves came after a California state agency actually sued the gaming company for fostering a frat boy workplace culture. So far, Activision Blizzard's CEO under fire, Bobby Kotick, says he'll remain on.
One of the changes that could have happened was the CEO could have quit, but that might have damaged the stock price even further. So in this outcome, with Microsoft buying them, you will have some kind of change in the leadership, and you will have perhaps a company with better credibility when it comes to handling complaints around sexual harassment.
Activision's stock price has dropped more than 37% since its record high last year. After news of the deal went public, Activision shares soared, recovering most of its lost value, 37%. Takahashi says Activision may have realized the difficulty in trying to boost share price value without new ownership. On the other hand, Microsoft pounced on a deal that's far cheaper than it might have been, taking its deepest ever plunge into gaming and the metaverse. Mark New, CGTN, San Francisco.
Well, on that note, let's take a look at commodity markets today. Oil prices rising for a fourth day to a 7-year high. They were pushed high by an outage on a pipeline from Iraq to Turkey. That, of course, has increased concern about an already tight supply outlook amid worrisome geopolitical troubles in Russia and the UAE. Meanwhile, gold prices falling towards previous session's one-week low as the prospect of aggressive rate hikes by the U.S. Fed sent benchmark Treasury yields to 2-year highs. That, of course, reduced the appeal of non-yielding gold going forward. Meanwhile, copper prices firming up today. They were supported by expectations of a further policy easing in top metals consumer China. That, of course, was offset by pressure from a firmer U.S. dollar and, of course, a rise in inventories globally. On that note, let's take a short break. Still to come. Easing restrictions breathe a sigh of relief into most companies. We'll look at Egypt's Nile Air.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
Now, since South Africa's return to democracy in 1994, it has become an attractive option for migrants. It is the most industrialized economy on the continent, boasting well-developed infrastructure and services. Now, despite sporadic flare-ups of xenophobic violence, tens of thousands still seek refuge in the country every year. Here's CGTN's Julie Shire with more.
Johannesburg's Methodist Church has run a refugee center for over 2 decades. Moses Mettenheier found himself on the doorstep after crossing into South Africa illegally from Zimbabwe in 2010. He came in search of a better education and economic opportunities.
Before you go to school, everything in front of you looks like it's dark. Like in my case, I failed. So they take me to school. I spent 3 years during my high school. Then when I finished my high school in 2012, the Methodist stops there. They don't stop giving you accommodation, but they don't pay for your tertiary.
Tens of thousands of asylum seekers like Mettenheier enter South Africa every year. The local Home Affairs Department has struggled to keep up with the influx.
So what you have is a continued number of people applying for asylum, for example, who really should be applying for work permits or other ways of coming into the South African labor economy. This, again, is not because there's too many immigrants. It's rather that the system is not designed to deal with the immigration patterns that we have.
Those who do migrate successfully help boost the local economy with little demand on social infrastructure.
Immigrants who are here are working. They are contributing. They pay VAT just like everybody else. They create jobs at a higher rate than the average person. So on aggregate, almost all of the economic analysis suggests that immigrants contribute economically to the fiscus, to the tax base, and they take very little in terms of schools, in terms of other services.
South Africa is home to the most amount of immigrants on the continent. Close to 3 million people not born in this country call it home. While unemployment soars and economic opportunities dry up, it's still viewed as a land of opportunity. Julie Shara, CGTN, Johannesburg, South Africa.
Now in Egypt, the outbreak of the COVID-19 pandemic affected key sectors in the country. Some companies, such as Egypt's Nile Air Company, are now picking up, and that's after periods of pandemic-induced closure and near liquidation. Here's CGTN's Yasser Hakim with more from Cairo.
The travel and hospitality industry in Egypt has been the sector that's hardest hit by the outbreak of the coronavirus pandemic. Tourist arrivals and occupancy rates had dropped by over 80% in 2020 and in parts of 2021, dealing a huge blow to the industry, which is a main source of hard currency for the North African nation. Nile Air, a local private sector airline company, was on the verge of filing for bankruptcy in late 2020 due to the global travel restrictions at the time. The management, led by CEO Yusri Abdelwahab, had to take quick action to avoid the worst.
When you have 10 grounded planes that are served by 1,000 employees, obviously, in these circumstances, there are jobs we will not need. We did not fire any workers, but we reduced salaries of our employees. Those whose contracts ended, we told them to wait till things returned to normal before we offered them new contracts. We renegotiated with debtors such as companies that leased us their planes, maintenance companies, and the GBS ticketing firms. The losses were in the millions, so we had to go through an extensive restructuring process.
The Central Bank of Egypt had provided hundreds of millions of dollars in emergency relief funds for state-owned airlines. Although the private sector was allowed to join in flights to evacuate Egyptians abroad during global lockdown, Nile Air CEO Yusri Abdelwahab says they were expecting much more, especially after the pandemic left their businesses on the brink of closure.
معالي السيد وزير الطيران المصري
The Minister of Aviation waived all fees that we owed authorities, as there were orders from the President to support the Egyptian airlines. The state said it will provide loans to us, as well as logistical support. We have called on the Minister of Aviation several times for support, and we are still awaiting the response till now. He gave full support to the state-owned companies, but the private sector is still waiting for concrete steps as promised.
الإجابات لغاية دلوقتي يمكن هو بالفعل وقف مع الشركات الحكومية.
The government recently announced it is preparing a raft of aid packages for the stricken companies. As the end-of-year festivities pick up and prospects of improved businesses in 2022, Abdelwahab is cautiously optimistic. He hopes the COVID-19 and its variants are well contained so he could keep his planes in the skies. Yasser Hakim for CGTN, Cairo.
And before we leave you today, a quick look at Africa's currencies. South Africa's rand gained today as December inflation came in quicker than expected. Of course, the reading helped the rand trade 1.1% stronger today against the dollar. And Kenya shilling weakening further, trading at a new all-time low of 113.5 units to the dollar in the past week, and that's due to higher dollar demand from importers. Now, traders say there has been broad demand for dollars in the market, which has outweighed supply from agro-commodity exports and, of course, diaspora remittances. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.